And you're watching Business Incorporated live on Channels Television. Here's what's coming up in the next 55 minutes. The Africa CEO Forum enters day 2. We get an update from Ini John McCra. And prices of plantain increase in Nigeria. We get a sense of why prices are so high. And the Zimbabwean government defends its car import ban. Good to have you join us. I'm Lade Williams. Let's get a check on what's playing out with the markets now. Starting as usual with oil now. We're still seeing that ease we saw from earlier today from a 2-week high, way down by concerns about rising supplies and some caution over whether the pause in the U.S.-China war, if that's really positive, at this point in the long term. And we see $65.35 a barrel, but it's a bigger move compared to the morning, 0.60%. That's for Brent. WTI is up 0.73% at $62.40 a barrel. So it's still positive, at this point, even though not as strong as we saw yesterday in the market. Let's get a check on metals now. See gold prices. They're hovering near a more than 1-week low hit in the previous session as the U.S.-China agreement to temporarily halt reciprocal tariffs. That's boosted, risk appetite. So no one's looking at being safe right now in gold. Unchained though, that's for spot gold, $3,230 per ounce. And we see U.S. gold futures on the flip side as up 0.20%. Spot silver, not looking so bad, 0.60%, $32.78 per ounce. And platinum, that's a big 0.80% jump. Palladium still lagging, $942.19, down 0.40%. And we see after Nigeria's headline inflation is all about expectations now, and we're seeing FDC now projecting 24.82% year-on-year inflation rate. That's for April. And the think tank is saying that the forecast indicates that this increase will be mainly due to the impact of a depreciating naira on domestic prices and the impact of planting season on aggregate supply, as well as the cumulative effect of the telecom and petrol price increase. FDC's projection, which comes ahead of official report from the National Bureau of Statistics, that's for Thursday 15th, will mark a 0.5% increase from the 24.23% inflation rate recorded in March. Meanwhile, FDC says it expects that Nigeria's Central Bank's Monetary Policy Committee, whose mandate is to control prices, is likely to maintain the status quo at its upcoming meeting, that's for May 19th and 20th. And economic activities in the country expanded by 52.2 index points, representing the 5th consecutive month growth in April, according to the latest Purchasing Managers Index report from the Central Bank. The financial market regulator attributes the increase in the PMI performance to the agricultural sector, which recorded the highest expansion with 53.8 index points, representing its 9th consecutive monthly growth during the period. A further breakdown of the 36 subsectors across the industry, services and agriculture sectors showed the 22 subsectors reported growth in economic activities, with transportation equipment reporting the highest growth during the review month. The Apex Bank noted that the sustained expansion across all major sectors provide a positive outlook for the second quarter of 2025. And following the federal government's plan to remove electricity subsidy for customers consumers in the country, as recommended by the World Bank, stakeholders preferred some measures that would mitigate challenges relating to the power sector. I had a chat earlier with the CEO of Association of Nigerian Electricity Distributors, Mr. Barrister Sunday Oduton, who was a guest earlier with me. Take a listen.
There should be collaboration, cooperation, and alignment. There are 3 words. Simple thing. From the government side, Ministry of Power, to the regulators who are also government agencies, states, of course, service provider, operators like us, the discos, transmission, and of course, the power generators. Because at the end of the day, If we don't work together and everybody keep doing their own thing, it will not work. Alignment means if we are generating 10,000 megawatts, we must put in place a system, equipment, investment to enable us to transmit 10,000 megawatts. We must put in place a system, equipment, and infrastructure and investment that will enable us to distribute 10,000 megawatts. That will be 10, 10, 10. Generation 10, transmission 10, distribution 10. What do we have? A misalignment, total misalignment. What do? We point accusing finger. We look for somebody to blame. And the soft target, of course, are the discos, because we're the one that you know, we're the one that you see. If I'm not able to give you the hours that I require as a Band-Aid customer due to unavailability of supply to me from Transmission Company of Nigeria.
Yeah, that was earlier on Business Morning. Definitely so much talk about electricity subsidies there, and the World Bank recommending that we end all of that. We'll definitely keep following the conversation there. But let's pivot now to Abidjan, where the Africa CEO Forum, that's still on. Right there, we have Ini John Mekwa. She's there. Hello, Ini. Okay. All right, so definitely it's still on there. The conversations with business leaders, government officials, all of them trying to chart a way forward for the African continent, and definitely, he's going to be telling us what's playing out today so far. And we got her report earlier, and definitely we know the conversations are moving along just fine. Ini, I don't know if you can hear me. Hello, Ini. Okay, all right. Okay, you can hear me, right? Okay, so Ini, I know a lot is happening there, and maybe the network might not be as great as I want it to be, Ini. But talk to me about what's played out so far, if you can. Okay, yeah. So she did say the internet wasn't so good over there, but definitely we did see some reports coming out on some of the conversations being had there, and the CEOs and government officials trying to have some kind of handshake there, the private and public sector, to see how to move the continent forward, because what we're seeing so far playing out in the global economy with most of the tariff issues right now. Everyone's talking about tariffs. Ini, can you hear me now? Okay.
I can hear you, Ladi. Can you hear me?
Yeah, fantastic. So, Ini, just tell me what's playing out today. All right, I know there's some delay there. Yeah, she did tell me. She did tell me the network, wasn't so good, but we're just gonna try anyway to see how we can get her to give us more of those updates on what's happening right there in Abidjan. So, Ini, we'll try and get you again, but yeah, definitely, as I was saying, it's all about trying to get that handshake between the public sector and the private sector to move the African continent forward, because we've seen how most of the external shocks are impacting most of the African countries now. We're seeing that play out with currency. We've seen that play out with most of the commodity prices, and most countries African countries that are very, very reliant on most of these commodities. They're being swayed, by what's playing out with the prices there. We did see how oil fell below that $60 range, and how that impacted revenue for countries like Nigeria. So definitely, it's all about charting that way forward for the African continent, diversifying the economies. We've seen the World Bank, they're advising Nigeria to do away with expensive subsidies, but we know getting rid of subsidies comes with a lot of pain, especially for the average consumer that's going through a lot right now. We're going to be discussing also the price of plantain in the market. That has skyrocketed so high right now. I was trying to buy some a couple of days ago, just a bunch there, the big bunch. That was about 25,000 naira, and I said no, I'm not gonna buy that at this point. Even though I know my wife and kids, they love plantain a lot, but we'll definitely find out what's driving those prices and see how what's going to happen going forward. But at the end of the day, we're still going to be getting a check on for what's happening with most of these markets. Later on, we'll find out what's happening. That's with the U.S. market, most of the global markets that we track, and the markets right here in Nigeria. We're going to have my very own Ambrose Omodion. He will tell us what's playing out and what to expect, going forward. How are most of these corporate earnings impacting the share prices of most of these stocks? So we'll take a break now. When we come back, we'll head straight to the markets. Just stay with us. All right, we're going to be heading to the markets in a bit, but for our DSTV viewers, going to join a live coverage now. That's in Zamfara State for official distribution of vehicles to security agencies, where you can continue watching Business Incorporated on other platforms, but that live coverage is for our DSTV viewers. All right, let's get a check on what's happening with the markets now. We're all for the markets at this point. You see on the screen, for the NGX, that's 108,000, still maintaining that point at intraday, 0.10% down, though. There's a pullback there, which is expected. We touched 109,000 last week. Definitely, there's a lot of resistance because that was the previous high. So we're seeing a mild pullback at intraday, but that might flip by the close of trade today. We're definitely watching out for that. JSC all share index, that's up 0.14%, 92,295 points. Look at other markets we track. The EGX 30, that's North Africa, 0.54%, 31,746 points. And for the Nairobi Stock Exchange, for yesterday's trade, Monday, that's 127.22 points for the all share index. All right, let's talk to Mr. Ambrose Omodion now. To bring us up to speed on what's playing out with the markets, how the corporate earnings, impact and economic events impact most of these stocks. Great to have you on the show, Ambrose.
Yeah, thanks for having me. Actually, anywhere in the world, corporate earnings is what price feed on, especially when these numbers are healthy. And I can tell you that across the globe, including Nigeria, we have seen healthy numbers emanating from quoted companies or listed companies across the globe. But in particular in Nigeria, we have seen our market in another dimension. The corporate earnings and the fundamental of the market are looking stronger and better. When I mean fundamental of the market, looking at liquidity and the corporate earnings, these two go together. When you see a market that has liquidity and we are seeing a better number, prices are bound to look in the green. And people have experienced from the first day of the month of May that till the last 2 days we have seen a pullback for profit taking. And don't forget that anywhere where you're seeing a market rally for almost 5 days, we expect to see profit taking, which is also part and parcel of market inflation. I believe that the up and down movement in stocks or any market creates opportunity for investors to buy. That means what we are seeing a pullback on Monday and yesterday, why today market was seeing little stability. Investors will not panic, rather it will buy into value as earnings are reviewed, where companies are going this current financial year 2025.
Right, and definitely we know investors, they like to pay into what's happening, with the financials of most of these companies. So talk to me about, the performance you've seen with our stock market so far. How does it compare with the corporate earnings trends, we've seen, and let's take it far back now, maybe for the past decade?
For me, I would say that our market are really feed on corporate earnings. Look back to, let me just start from post-COVID-19, 2020, when the market hit 11 years low. We saw a kind of recovery for straight 6 years now because companies on the exchange have performed impressively. And price have feed on this number. Why is this earnings very important? Price feed on it. Why also it makes it possible for investors also to expect dividend from their company where they are invested. And companies on the exchange have delivered by paying increasing dividends to shareholders. That also reflects on the price. For me, this is what every design investor wants to look at when buying into any company. because that is the only shortest way to assess a company or a management if they are doing well. Even if these numbers are looking up, it gives investors the courage to increase their stake in that company. That's why sector rotation also continues, where they are seeing numbers missing target or projection of the company on the market. They start also selling up to go to where they see opportunity. And that's why I tell you that in any market, whether in Nigeria or advanced market, sector rotation and portfolio balancing is a continuous thing. And because of what, since earnings are looking better, people are looking at which sector, which industry that we should invest. And for Nigeria, I will tell you that most of the service sectors have really performed well, and we are seeing a good movement in the private sector after they have suffered losses in terms of FS issue in the previous years. Now there's regulatory stability in our FS that have impacted their performance. You can see the life of Nelson, the life of Unilever, Cadbury, Nigeria Brewery, all turning positive in their Q1. Starting from what we saw in the last fourth quarter in 2024. For me, it's a good development for the market. That means banking sector where we are seeing this FS impacting positively in their previous year. You can see the first quarter numbers from the bank, we are seeing a slowdown to see the actual business of banks impacting their numbers, not as a result of what FS gain. For me, most of the banks have posted a good number, while others are seeing some also having a decline in their bottom line because of what the impact of FS stability. Now, when there was once off gain in terms of moving from 400 naira to almost 1.5, we saw banks balance sheet or corporate tax looking heavy. But now that stability, you can see that's very important. Why those microfinance sectors that have suffered before are now going back? Because they can plan with a stable world, expect that between 1.5 to 1.6 or 1.7. Now with that plan, they can also know what they are doing. Then where you see from 400 to 1.5, that throws out of the microfinance sector into red. But now they can plan with it. If the CBN can stabilize this, and that will help companies for Nigerian economy to also play the part of recovery or growth, I would say.
Right, and we're also in a season of forecasts right now, and we see the World Bank giving some projections for the Nigerian economy. They're saying for Nigeria's GDP that should increase by about 3.6%. Inflation is expected to average about 22.1% this year. Do investors in Nigeria, do they pay attention to these projections?
They do, because why I say they do, because most of these figures help them to make informed decisions, especially when it comes to looking at the GDP figure. When you see, in the economy where GDP is growing, you look at the sector that drove that GDP, that's where many investors want to look at. Also, like in form of inflation, we see that when inflation is looking southward, it gives investors confidence that they are likely to be rate cut or stability or unchanged for the monetary policy. Because anywhere in the world, policy meeting is focus on data, which is our economic data like inflation and the purchasing manager index and also GDP. And we have seen that for the last month, for the month of April, we saw that our purchasing manager was a bit flat, good, and also all eyes are still on April inflation or consumer price index that will come by any moment from now from Thursday, and also first quarter GDP. That will inform what CPN will be doing. But one thing that is very, very here, look at the matured economy where we have seen that the tariff war or trade war has pushed a lot of certain parts of this matured economy to watch by keeping their rates stable, while some even cut to boost their economy because now it's a survival of the fittest. I believe that our own monetary policy or CBN to look at how can we drive the economy, especially with the target of saying you want to achieve $1 trillion economy. You must put the economy in a drive that it will attract investors and also growth for people to bring more also what they have to invest in the economy. But if the economy is still dragging feet, your target of achieving a $1 trillion economy, they think that will be like a story. But I believe that if the fiscal authority will work it out by giving us security, and also the CPN can also come with a good interest rate by even cutting it or leaving nothing, cut to make that people have access to cheap funds that will also support the economic growth and also drive these corporate earnings to that are positive as that Q1.
Definitely. We know inflation, exchange rate volatility. We've seen that impact, investor sentiment, so far in the country. But with what we're seeing, currently, are you seeing a tailwind or a headwind, for, earning power of most of these listed companies? I know you did mention that, the FX losses, seem to be, calming down. at this point. So do you still see the Naira staying strong, going forward and, being a tailwind for most of these companies?
Yeah, actually, I would say that when you were having a headwinds, there was a lot of challenges. We saw companies on the exchange posting a better number, especially for 2023 and 2024. Now that we are seeing stability in FX, that should be a plus for them. And also, if there's a further move by CBN to reduce rate, that also kind of boost performance in Q2 and going to the future. But I believe that Nigeria corporate body have master or kind of study the environment they are catching on this inflation and also the headwinds to make profit. I mean, anytime there's a good, better economic indices, it's a plus for them. I believe that if there will be no kind of interest rate cut or even on change again for the next FPC meeting, with what we've seen them doing in 2024 and first quarter, most of these companies will still put a better number in Q2 because nothing has changed as I will speak now. Apart from saying that the matured economy was seeing the volatility in terms of fear of uncertainties, global recession. But now with China and the US trying to move to the same direction, that means the fear of recession is also cooling, and that also will be a plus for our economy. If our economy just look inward and see how they can also drive our own, not just looking at what is happening globally, we need to put the economy in the path of what quick recovering and good so that we can attract more investment within locally, not only international, local investment that people have confidence to put that money because if cost of running business aside, because of high interest rates, I tell you, also slow the work, slow down growth anywhere, anytime.
Right, and talking about international, talk to me about how earnings from multinational corporations, for example, Nestle and MTN Nigeria, how they differ from local firms in response to most of these economic shocks.
When it comes to international companies, now because in most of the domain where they operate in, there must be a lot of little G-trade here and there because of the tariff. But with point we're seeing now, or direction we're seeing that the little stability, I would say that in matured economy, we have seen that most of the earnings there were healthy, also we are seeing here in Nigeria. That means they understand the environment where they are. That's why when there was this issue, because that most companies that are operating international is where investors are putting money. So they believe that if in this environment they are being hit, another environment will make money to also impact their bottom line. That's why strong left US market for Asia, for Europe, and for Africa. I believe that if MTN is well positioned and Nestle, because most of them, their market is Nigeria here, I don't believe the impact of tariff will impact them negatively as well. But I believe that with them having a broader market in Nigeria here, and also they are still investing in the equipment to give us a better service. Because I speak now, but I'm not seeing a service that coincide with what we have increased in terms of their service rate or their tariff. We want more service, but if that happens, I expect to see more gain or more positive earnings from those companies. And Nestle also have moved to a profit position after they're able to put their accounts together. And also don't forget that because of this free trade zone in Africa, Nestle have opportunity to sell in Africa continent. That will also be a boost for them. Really, they have Nestle in Nigeria, Nestle in Ghana, and another Africa country. For me, it's a plus also for Nestle.
All right, so, shifting focus to MTN now, we see the group did report some stellar earnings there. Service revenue rose about 10% overall. I've also seen that, with constant currency, so far, that has somehow, that's from MTN Nigeria, what we've seen, happening with their earnings, that has somehow, boosted the earnings for the group. Is this something, we're seeing more of, happening going forward, or is this just a blip at this point?
No, for me, we expect to see more of improved numbers from MTN, sorry, because yes, federal government have approved almost 50% hike in tariff or the core cost, which is also good for them. And also, like I said, because we are having relatively stability in FS, between 1.5 to 1, some companies have planned to 1.7. Within that range, if they remain, then they can manage it. But then when they go beyond this range, it will become a problem. If the FS remain this range, I'll tell you that most of the companies that bounce back going to face more better number going to the future. For me, it's a good one for MTN. All that they need to also kind of more, like how I put it now, it was to up their game in terms of service because most of their network are not working effectively as expected. Even though when they have hit their work, the cost of tariff, they need to work on that. That is what we want to do. Yeah.
Right, but so we see a positive impact now from what's happening in Nigeria, and that's impacting the group positively. Do we see what happens with the group, impacting MTN Nigeria positively?
Yes, I see it's a win-win for them because MTN Nigeria is to have a market here. Even I know that yes, MTN South Africa don't have much because this MTN Nigeria, South Africa is different. But because of that name, no, yes, they might have a positive impact, but I believe that the market where they operate there is also improving environment for them. Because one, I will tell you that the consumption for data because of people that these days are doing lots of things online, as well on now. I believe that also boosts their performance with increase in price anywhere in the world. When there's increase in price, either in commodity, in service, it's how you work a part in your bottom line. Really able to manage your cost at the end of the day.
Right. Let's look at uncertainty now. We see how uncertainty has boosted the price of gold over $3,000, hitting about $3,500. Do Nigerian investors, prioritize, dividend-paying stocks, over growth stocks during economic uncertainty?
Yes, it depends on your investment objective and also your goal. For some, they want to go for defensive stocks, while some that understand, the game of, investing in good stock, want to play, take advantage, especially if the sector have opportunity of work expanding, and also the company is launching out world to increase its market share. That's why it depends on your investment. For me, you can do defensive with stock that are stabilized already, while growth stock that has stock that that yes, the numbers are going to put, because I said earlier that price feed on earnings. And if that number is coming at that, I expect to see a develop. A good example of one of the companies that I know that in Nigeria have really demonstrated the power of earning power and payout. I think the life of NACO PSC in Nigeria, and NACO 3 years ago was selling around 7 naira. Today, NACO hit about 85 naira before marking down on Monday. That's hard to go because the company has constantly grown their earnings and also grow their payout that impacted the investors and for them to have more confidence and increase their stake in the company. For me, that is how you look at growth company that also that multiply into what into a defensive stock with time. The way they are going now, other companies that were identifying in invest data that has that character, that quality that act now as a good company, you can start paying on the next 2 or 3 years also take, because people have invested in NACO at 7 naira, at 8 naira, they have made 85 naira, they have made money, even though we are not looking for dividend. That also have given them a lot of money. That means as an investor, you invest your investment objective for what you are trading for. That's what to guide you where to gain. There are some that want to buy stock today and sell the next, they make 10% and go. That's want to gain it a company and stay for 3 years, 2 years. As I say, your investment objective or your trade plan is very, very important in any market you are trading.
Right, I guess as long as you're in these markets, you definitely need to have a plan, for your entry and your exit. All right, let's look at trading today. Where are you seeing it swinging to? Do you think the weakness we saw starting the week continues for the NGX?
Yeah, for me, the pullback we saw. The one thing that when we are seeing that market break is expanding, the midst of pullback, there are some investors that have opportunity to buy into value. But market pulling back today again for me, it will be on a reduced momentum, if at all, because we are seeing that more stocks are on the gainers chart than the loser, as to speak. But it's because we see one high cap stock on the loser chart that weight on the index. That's why I say investors that index is not the only indices to invest in Nigeria stock. Look at the central index to take your decision. But I believe that companies have reduced some value that you want to buy. Don't look at index alone to judge the market, but look at where there's nothing happening, especially looking at their numbers and also what the sentiment of the market, especially as far as are still on the economic data we're looking at, expect to come between now and Thursday. That will give more information also. When we see also Q1 number for 2025, that also give us more information. But for those that are in this market, looking at the corporate earnings that came from first quarter, the market what happened to our GDP for first quarter. That is that people like to also be in green to see a marginal growth again, because we are seeing that most sectors of the exchange have put the total number.
Urban shares have run out of steam after Monday.
All right, thank you so much, Ambrose Omodion, there for giving us what's playing out with this market and how investor sentiment is impacted by economic forecast and all of that. He's a chief research officer at Invest Data Consulting. Thank you so much. All right, now let's get a check on what's playing out with the Middle Eastern markets now that we track there. We see for the Middle East, it's still green on the screen at this point, 0.46%. Dubai, Abu Dhabi, 0.13%. We know President Trump began a tour of wealthy Gulf states today by visiting Saudi Arabia. He's also we'll see him at Qatar and the United Arab Emirates also, which is focused on securing trillions of dollars in investments rather than security issues ranging from war in Gaza to Iran's nuclear program. So definitely we know Trump is right there. And Melissa, but see positive sentiment there. Let's see what's happening in Saudi Arabia and Qatar. The Saudi Arabian and Qatari index. Now we see the Tadawul marginally up 0.05%, 11,494 points. You know, Scott Besson there, he was right there in Saudi Arabia, having conversations there with the kingdom on what to do and the charting a way forward for both countries there. Qatar, 10,585 points, 0.22% up. Let's get a check on what's happening with U.S. markets there. We see earlier today, following a big rally, investors, they're looking to the key inflation reports there in the U.S. now. Consumer Price Index, a broad measure of goods and services costs across the U.S. economy, is expected to remain at a 2.4% rate in April on a year-on-year basis, and that's according to Dow Jones consensus there. But it's red, right now for the future, 0.35% down for the Dow Jones Industrial Average, 42,331 points. I'm guessing investors are, taking a breather here to understand what's playing out with the data. Focus is on the data now. S&P futures 0.32% down, 5,846 points. And the tech-heavy NASDAQ, that's down 0.34%, 20,000 points still held. Wall Street enjoyed a huge rally on Monday after the U.S. and China agreed to slash the steep tariffs for 90 days, raising hopes a trade war won't tip the economy into recession. All right, let's get a check on what's happening with Asia now. The Asia Pacific markets there, we're still seeing they're closed, at this point, and they did follow that rally we saw in most markets. The Nikkei is closed up 1.43%. Marginal green close for the Kospi, 2,608 points, but it's a big drop there for the Hang Seng Index, 23,108 points, 1.87% down. Other markets we track in the region there, we see the Nifty 50. That closed red, even though we did get that inflation number out of India. Good, yeah, the inflation numbers were good. That's for April, but we're seeing the market there reacting negatively, 1.39%, 24,578 points. Shanghai Composite, 0.17% up today. So that's how most of the markets we track in the global space are looking. Let's move over now to Berlin. We have Chimpon and Chimbelu there. Let's see how European markets are doing right there. Hi, Chip. Great to have you.
Hi, Ladi. Good to be here.
Yeah, so, we know most markets were doing well, yesterday, but I think Europe wasn't doing that well. How are markets looking there now?
Yeah, well, Europe didn't do quite as well as the markets on Wall Street, obviously, but it still did much better yesterday than it did today, or that it is doing today. It has run out of steam after trading much better on Monday, and the Euro Stoxx 600 is actually up 0.17%. And here in Germany, the DAX is flat. Now, investor sentiment is, of course, being kept in check. There are worries about U.S. President Trump's trade policies and, of course, their impact on the global economy. Investors appear to be concerned that the de-escalation in the U.S.-China trade dispute may not have a lasting effect, Ladi. And it is, after all, only a 90-day pause on those higher tariffs. The overall picture is, of course, more complicated. Despite Monday's reprieve with China and last week's agreement with the United Kingdom, the U.S. hasn't inked a trade deal that could serve as a model for its ongoing disputes with its biggest trade partners, the EU included. And of course, it's not just the tariffs. Wars and geopolitical tensions are expected to continue affecting the markets too. And of course, today, investors are also watching out for a US inflation report that, of course, could provide some direction for Wall Street.
Right. I guess the markets are not satisfied with, a 90-day pause. Maybe they want to see 1,000 days. Maybe that will make them feel happier.
I think they just want to see a pause on those tariffs altogether and an agreement, obviously.
Yeah, of course. So, but we see new figures show that foreign direct investments into Germany, that fell for the third consecutive year in 2024. Can you break down the numbers for us?
Well, the number of greenfield projects was actually 2% lower last year than in 2023, and that is according to Germany Trade and Invest. And the amount invested was 23.2 billion euros, which was also lower than in 2023 and the year before. Now, despite that, investment volumes actually remain relatively high and are still above pre-COVID pandemic levels. And that is largely due to some big ticket projects that includes investments by Amazon Web Services, Microsoft, and Apple, which all invested more than €1 billion in Germany. Now, these tech giants were also the main reason why the United States remains the leading source of foreign direct investment here in Germany. But despite last year's decent figures, there are obviously some concerns about Germany's competitiveness.
All right, what are the main concerns here?
Well, Germany, of course, is the only G7 economy that failed to grow over the last 2 years, and it is on track to stagnate this year. And the main challenges that, of course, Europe's biggest economy, Germany, faces are aging, underinvestment, and too much bureaucracy. And that is according to the International Monetary Fund. And businesses are also obviously concerned about this. A recent survey by the IFO Institute shows that more companies reported seeing a decline in Germany's international competitiveness in April. And right now, Germany isn't, of course, only facing structural economic challenges. It also has to deal with the effect of the Trump administration's reciprocal tariffs. And of course, a slowdown in global trade also does spell trouble for Europe's biggest economy because it is export driven. And Germany's industry, which has been its backbone, is obviously especially vulnerable. In fact, the IFO survey shows that the auto industry and mechanical industry, which play a big role here, have all suffered setbacks in terms of competitiveness. Now, alongside Trump's tariffs, Germany's new government is also facing multiple economic challenges, and it is, of course, under pressure to deliver visible results because, of course, of the rising popularity of the far-right AfD. So it, too, does have its work cut out.
Right. I guess at some point we'll see if the U.S. will, prioritize Europe here when it comes to, getting that trade deal. I know they're focusing on, Asia and other countries at this point. But thank you so much, Chipona Chibelu, for giving us some update on what's playing out in Europe.
Thank you, Ladi.
All right, to other stories now. See, Egypt's Suez Canal authorities, as the authorities considering offering discounts ranging from 12 to 15% on transit fees to help restore traffic in the strategic waterway, reeling from attacks by Yemen's Houthis on Red Sea shipping. According to Osama Rabi, revenue from the canal continued to plunge on the back of attacks on shipping by Yemen's Houthis, who say they are trying to shut off cargo bound for Israel in support of Palestinians in Gaza, but who are also chasing ships away from the canal. Revenue from Suez Canal, a key source of foreign currency for Egypt, plummeted to $880 million in the fourth quarter from $2.40 billion a year earlier. The victim of Houthi attacks, central bank figures showed earlier this month that definitely that's impacting what we're seeing right there in the canal. All right, so yeah, let's pivot back to Africa Sales Forum now, day 2, and John McQuarrie has packaged this for us, an update on what's playing out today. Take a listen.
Yes, Ladi, so it was difficult getting you on the network. But, just to give you what has been happening in the last 2 days here at Abidjan, where the meeting of the Africa CEO Forum comes to an end today, it's been passion that we have seen exhibited. And yes, talking about the tariff, it seems to be the motivation for the theme for this year. Africa has been challenged to look inwards, and that is the core of the conversation that has been going on here in different segments, from industrialization to power to funding, small businesses, big businesses. It's all about challenging Africa to look inwards. An interesting panel was the one with some president, like President of South Africa, Mauritania, and all of that. They sat down to look at it from the public sector. But The private sector has also come to challenge the public sector about the issue of governance. That seems to be a deterring factor for the private sector to bring in their funding into all of this development. So, Ladi, it's a whole lot of talks has been going on, but as we would always say, after the beautiful ideas and all the beautiful talks, will each representative of countries on the continent go back home to implement or be challenged to at least do something new about Africa, looking inwards for funding and its development? I guess that is what is left to be seen, Ladi.
All right, thank you so much, Amy. Definitely, I know the internet didn't allow us to have fun of that conversation, but definitely we see the conversations going on there. And to other stories at this point, the import ban on vehicles older than 10 years, which came into effect January 2022 in parts of Zimbabwe, and that's part of the strategy to protect and revitalize the country's motor manufacturing industry, which has been struggling due to competition from cheaper imported used cars. According to the industry and commerce minister in Zimbabwe, the government's decision to phase out the importation of vehicles older than 10 years by 2030 is aimed at stimulating the local industry. The policy aims to boost the number of units sold annually, which used to be around 20,000 before the sector's decline. By protecting local manufacturers, the government hopes to create jobs and support Zimbabwe's broader economy goals as outlined in the National Vision 2030. The minister also highlighted the financial burden of vehicle imports on the economy, with Zimbabwe spending an estimated $664 million on vehicle imports alone. That's for 2023. And we see Zimbabwe has launched a new online visa application system, allowing travelers from countries requiring a visa to apply electronically in a major move to modernize the country's immigration processes and eliminate outdated paper-based methods. The initiative is part of an expansion of online border management system, first introduced in 2024, which now offers electronic visas, electronic permits, and digital travel clearance services. Announcing the developments, the chief immigration officer said the new system would significantly improve the application process by eliminating the need for physical visits to embassies or consular offices. And Zimbabwe and the European Union have hailed increased trade between the Southern African country and the bloc, which has seen significant growth in recent years. According to the Foreign Affairs and International Trade Deputy, said trade between Zimbabwe and the bloc has increased by 30%. She said the partnership had also seen a 90% increase in foreign direct investment to Zimbabwe. The forum will connect Zimbabwean and European investors, businesses, and public institutions, offering a platform to explore new investment opportunities and strengthen economic ties. All right, for our plantain fans in Nigeria, well, we've seen the prices skyrocket recently, and definitely we've heard that it's a seasonal crop, so that happens, from time to time. But let's bring in Tomiwa Jewole now, as an analyst with Financial Derivatives Company. Hello, Tomiwa, great to have you.
Good morning, Ladi. Thank you for having me.
Yeah, so Tomiwa, we get it that sometimes when a crop is not in season, the price will definitely go up. But this particular price increase seems a little too much. How are you seeing it?
See, you knew the point, the amount point. See, seasonality effect is big in Nigeria. It's still a big concern. So typically for plantain, the dry season is the harvest season, and that usually runs from November to February. So currently, when the rainy season, the rain is currently falling, and this is actually the time when farmers plant the plantain, because plantain needs water at the initial period of growth. So seasonality is the number one key concern here. Two, from economics, of course, is the supply and demand balance, is that there's no perfect substitute for plantain. So that makes the demand stronger, and there's no substitute to bounce to it if you're not getting the plantain you want. So right now, it's a sad time for plantain lovers in terms of the astronomical rise in the price and also the scarcity. But another reason, again, why it seems to be extreme, because a lot of people are saying that they've never seen plantain prices this high before, is, throughout the year, Nigeria, the inflation in the country has been high. Petrol prices, logistic costs are not the same. Diesel petrol prices are not the same. And the general level of price generally in the year on year as in the country is high. So that's one of the reasons why it seems like this is the highest we've ever been. But if nothing is done about seasonality, this time next year we're going to be having the same conversation again. So that's what it's.
Yeah, because I'm wondering that there has to be some kind of solution at this point, because it almost seems this looks like demand destruction at this point, because I'm guessing if the buyers don't buy, all of that will go to waste.
Sorry, what did you say?
I'm guessing if the buyers, because we're seeing a demand destruction. So if the consumers cannot afford it, that means it will go bad.
Oh yes, so as I said, yes, the price hike has been ridiculous, and there's no direct substitute for plantain, and it's very scarce. But one of the issues we are seeing is that as demand is increasing in Nigeria, production has been relatively flat. So supply has maintained relatively low levels or on a change level over the past few years, while demand has been increasing. Demand has been increasing. One, urbanization is increasing, population is increasing, and so there are a lot of things you can do with plantain. The versatility is of the old, and even when we talk about value added, plantain chips, and so the demand is strong. Meanwhile, supplies remain relatively flat. So
that means plantain chips, the price of that will go up, I'm guessing.
Yes, definitely. Since the raw material, plantain is the raw material. Plantain, and again, the prices are going to remain relatively elevated in the next few weeks to months. Again, to more supply begins to come once we reach the harvest season. So that's just the way it is.
All right, we'll keep an eye on those prices. Hope they don't go any higher at this point. Thank you so much, Tomiwa Ajole.
Yeah, thank you for having me.
All right, let's get a check on what's playing out in the crypto market now. Definitely, we did see, Bitcoin try to get back to that last high, but that didn't happen. But it's still a greedy market at 70 points. I'm looking at a fear greed index. Some of the headlines now: see, Kenya has ordered WorldCoin to cease the biometric data collection right there in the country. WorldCoin there got really popular with that, all of that biometric data collection that they do. With the platform there, which somehow you get compensated for putting up your data on their platform. There we see Ethereum has flipped Bitcoin in a key liquidation metric. It's quite an unusual twist there. Definitely it's not flipped Bitcoin on CoinMarketCap, but when you're talking about that liquidity there, it's not been seen in a while. This move shows that Ethereum's potentially troubling downturn there makes it that liquidity there impacts how much liquidity, if you compare Ethereum and Bitcoin, that's a key metric there, and we've seen that flip. Then Paul Atkins, the chair of the Securities and Exchange Commission, has outlined his plan to revamp the agency's policies on cryptocurrency. Remember when the crypto community in the US wanted Gary Gensler gone, so he's gone now. And the new chair is going to bring up some new rules going forward. All right, let's talk to Shehu Dania now. He's the CEO of Alpha Geek Technologies. Hello, Shehu. Great to have you.
Hi, good afternoon, Laddie.
Good afternoon, Shehu. So it's all about those strategic Bitcoin reserves at this point. We've seen the U.S. and President Donald Trump. He did promise the strategic Bitcoin reserve. How do you think it's going with that now?
Basically, we're seeing a new dynamics to the adoption of cryptocurrencies worldwide. For a country like the United States to be talking about having Bitcoin as their reserve, it means a lot for the ecosystem as a whole. But I believe that even at this side of the world, we see that there's a need for us to actually take Bitcoin and cryptocurrencies very, very seriously. US taking that position means they want power, and they want to, they see that that's where the world is going. And having that on their reserve sheets actually gives them power and also gives them the opportunity to be able to leverage off the growth in the price of Bitcoin. Let's remember that Bitcoin it's finite. It's still going to be done with mining. That means it will become very, very scarce. And just a few people or a few countries that have Bitcoin in their possession will be able to call the shots in the not so distant future.
Right. And, talking about, limited supply and unlimited demand, with Bitcoin? What if somehow magically all the Bitcoins are mined and somehow more Bitcoins, come in?
I mean, Bitcoin is divisible up to 8 decimal points. Those are the satoshis. So I mean, yeah, it was people will then now start dealing more with sats, but it still does not negate the fact that the value of one Bitcoin would have exploded astronomically. But in terms of mining new Bitcoin, that would be impossible. I mean, we're seeing that different altcoins, different cryptocurrencies have come up that have been minted into circulation. They're being, but Bitcoin would always be Bitcoin.
All right, we'll keep watching out, for that. But we also see Arizona, they become the second state to create a cryptocurrency reserve fund. Yeah. So we're seeing states in the U.S. now, accumulating this. How are you seeing that? Yeah,
it goes to show that they are probably reflecting and if they had actually decided to invest in Bitcoin several years ago, the positions of the country, whichever governor or leader of any state or country that had actually done that several years ago at the inception of all of this would definitely be highly honored in the country and respected, probably be even immortalized to some extent because it would have made a whole lot of money. So it makes sense that people are able to diversify their portfolios. Of course, I'm sure they've definitely done their risk strategies. And from what I gathered, they are doing maybe about 5% of their public reserves is allocated to digital assets like Bitcoin. It may not be only Bitcoin, but they know at least 5% is still the risk worth taking.
Right, and it looks like most of these countries are really bullish when it comes to stacking up Bitcoin. But I don't think Africans or African countries are looking that way.
I mean, so let's say for Nigeria, for instance, starting from home, we know that the conversation is different now. The current administration and the current leadership of the SEC are actually taking, they've gone full support, regulating cryptocurrencies. In terms of reserves, I believe that the conversation is ongoing about, Nigeria, but of course they still need a lot of. Everybody wants to understand the fundamentals, but it may be too late by that time. So I believe that at points like this, it's about taking the risk, taking the initiative. I think other countries like Kenya, also conversations are out there. I know their Capital Market Authority are considering, creating some kind of digital assets reserve. And I know also we're working with the African Stablecoin Consortium to do a digital Kenya shilling, just as we have the digital naira in Nigeria. So yeah, I mean the countries are quite a number of other African countries, though we are very low. Generally I believe that it's something that is worth looking at.
Yeah, because Shane, to be really weird, for a country, you stack up your reserve with a digital currency, and that just goes to zero.
Yeah, so that's why there'll be risk mitigation, even as individuals and as businesses. Just always, whatever kind of investment it is, you have to diversify your portfolio. Because there will be up and down, there'll be ups, there'll be downs. The truth is, it's money. Nobody can afford to lose any money. But usually says, you invest money that you can afford to lose. However, it's money that you will not miss at the point when, it shouldn't be all of the money that you need for a capital project or for something, because nobody can predict the market. So it's sort of like investing. Traditionally, everything, be it gold, whatever commodities, it has the seasons, and none of them are predictable. So it's, it's something that we all look forward to, and I believe that the risk management should be taken seriously. So we know, what percentage of our reserves can be actually.
Right. I know you did mention, investing money you can afford to lose, but I hear with the cost of living crisis, there's no money you can afford to lose.
Nobody can afford to lose anything. So I mean, pretty much it's sort of like you will. So it's not financial advice, but you would kind of like change priorities or move priorities around. So if I traditionally, maybe, I mean, I'm not saying that this is what I do, but if I traditionally have 3 meals a day, I can decide to do 101, and then my lunch money I always put into buying or investing in some assets.
Right. Okay, that makes sense. But me, I'm doing 010. Thank you so much, Daniel, for bringing us up to speed on what's played out. Thank you.
Thank you for having me. Have a great day.
All right, so that's almost the markets we're tracking, looking today. Still quite, still okay, at this point, but we'll get a sense of what's playing out for the midweek trade. That's tomorrow. Thank you for watching. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.